from the station that's on your side. This is Channel 7 News Good Morning Arkansas.
Hey everyone, welcome back into Good Morning Arkansas. So this last year has seen a lot of change. That's an understatement, right? With the world shifting the way it lives to adjust to a pandemic, of course, and with all the extra time spent at home, many folks may be rethinking their living arrangements, especially when you have been renting an apartment or a smaller space. So with interest rates at historical lows, you may be throwing money away on renting when you could actually be building your wealth by owning your own home. And it may be easier than you think. I love talking about these segments. And here to explain what we're talking about is actually Jacob Rice, a loan officer with the Bank of Little Rock Mortgage. Jacob, thanks for joining us. Let's jump into our first question here, which is, if you're renting, is now a good time to shift over to buying a home?
Yes, absolutely. Thank you for having me, Victoria. Yeah, depending on your particular financial situation, it's a great time to ditch renting and look at buying a home. You hear about unprecedented rates being low, just like the snow we've had. Rates are truly low at this time, and it's a great time to take advantage, look at buying your own home and building your own wealth and equity in a house.
Absolutely. Now, in the introduction, we kind of talked about how you guys might think that some people are throwing their money away by renting. When we say that, what do you mean by that?
Well, renting, it puts a roof over your head, right? But you're not really building any of your own equity or your wealth. You're primarily paying a landlord to, build their own wealth and equity. So, with a little bit of work, you can pay your own mortgage, strengthen your financial position, and really put, lead the track to being more financially independent.
Jacob, why do you think first-time home buyers are so hesitant to purchase a home?
Well, we love speaking to first-time home buyers. They ask a lot of questions and they're engaged in it. So, but it's a big financial commitment, and for the most part, it's usually the biggest step someone takes toward financial independence. Money Magazine will show that homeowners pay just about 15% of their income toward their mortgage payment versus renters that are usually paying closer to 30% of their income toward rent. So you can usually get into a home for a little less than what you would be paying for rent, save some money there, and instead of just giving your money away to a landlord, build your own wealth.
Pretty significant numbers there, definitely. So if someone is trying to decide whether to rent or to buy, what are some indications that they should look towards buying?
Well, it's going to be up to, the financial institution that you're working with as far as the overall eligibility and approvability. But generally speaking, you want to be at least a 600 credit score. You want to have stable income. Debt ratios we look at tend to be 45 to no more than about 50% of your gross monthly income, and to have some money in the bank for any expected closing cost and down payment. There's some great home programs out there. So primarily, speak to a mortgage officer. You can see us on our website, but look at different loan programs that are available. Home Ready, VA, USDA, rural development loans. These are all different options that we will look at to determine what really fits your best needs.
Okay. So 20% seems to be that magic number that most people think they need to put down. And that can be a lot of money. And you've mentioned today different types of mortgage types. So could those maybe require less of a down payment?
Absolutely. In fact, usually the first-time home buyer puts much less than 10 to 20% down. Usually it's closer to 6% on average. Wow. So, that's a big misconception. I get that question a lot. Certainly, you can buy a home without having to put down 10 to even 20%. This is a very favorable option is a 97% conventional home mortgage. That's a 3% down program. Some loan programs don't require any money down, such as the USDA Rural Home Development Loan I've mentioned, and VA loans. There's some criteria for each, but USDA does require a 640 credit score. It's not limited to first-time buyers. But so you'd be surprised at what options are available there, and certainly you can get in for less money than 10 to 20%.
Yeah, and Jacob, it does sound like there are several options out there for individuals. So if a renter has decided it might be time to buy and build their wealth, where should they start to look for that right mortgage for them?
Yeah, a great starting point would be to kind of look at your monthly budget, see what you're comfortable with paying per month, what you've been paying in rent. And I would suggest, looking at that, go into our website, blrmortgage.com. Click on our calculators and look at, how much you're going to pay on a monthly basis for a mortgage payment. And that calculator can back into how much home you could possibly afford based on your monthly budget. And then obviously, from that standpoint, work with us as a lender to talk with you about your budget for down payment, how your credit looks, your debt ratios, and determining we can give you a lot of options for which loan program might best suit your needs. And from there, it's great to go straight to a realtor, and they can help to show you homes that will fit your budget. And you go into that relationship with a realtor knowing really what your budget is and the right home. You know what your closing costs will look like, your payment expected, and being a good fit while you're shopping for a home.
Good deal. All right. A lot of good stuff here this morning. Jacob Rice with the Bank of Little Rock Mortgage. Jacob, thanks for coming on and talking about what first-time home buyers can really look out for. Until we see you next time, after this break, we will have more Good Morning Arkansas. Don't go anywhere.
Thanks, Victoria.